I get sent TikTok tax advice videos all the time. Sometimes it comes from clients and sometimes it comes from friends and family, but it always comes with the question of whether or not the advice is something they can take advantage of. Typically, the TikTok advice is related to some obscure tax law that only applies to a very specific situation, but the content creator conveniently leaves out those details so that the video has mass appeal and goes viral. That's where I come in. I'm Amy Northard, the accountant for creatives, and I'm here to debunk these tax myths and keep you on the right side of the IRS. Today, I want to show you 3 TikTok tax advice videos that are total nonsense. Since all of these videos are related to travel, of course I'll also share with you the factual information you need to know when it comes to business trips. Here's the first one on wrapping a weekend.
So maybe you're taking off for a weekend, and maybe some of the weekend you're going to be spending on the beaches doing personal items. Can you still deduct the trip? Let me show you how. All right, guys, we call this one wrapping the weekend. How can we wrap a weekend so we can deduct everything that we're doing throughout the trip and make it business related? So maybe you're taking off on a Thursday and you're coming back over the course of the weekend. I would recommend taxpayers staying until Monday and making Monday a business day. This way that more than 50% of your trip would count as a business related trip, especially if you left on a Thursday. If you happen to do items on the Saturday or the Sunday, as long as they're business related, you can include those inside of your business trip, including the hotel stay and including any types of dinners that you are taking. Please make sure to speak with your tax professional about wrapping your weekend as a part of your write-up.
Essentially, he's telling you to plan a weekend vacation, but book a quick business meeting at the beginning and end so you can write the whole thing off. But here's where this is sketchy. While you can and should include fun on a business trip, according to the IRS, you can't deduct expenses that are lavish or extravagant, or that are for personal purposes. In other words, if there's no real business reason to wrap a weekend full of vacationing into a business trip, then the expense incurred that weekend will definitely not be counted as a tax deduction. However, let's say you're a photographer flying out to Hawaii to photograph a Friday evening wedding. If you also set up a shoot for the newlyweds or guests of the wedding on a Monday, you could definitely make the case for expensing your weekend hotels and meals. The second video we'll take a look at is about having a board of advisors made up of your friends and family.
This strategy is called your board of advisors. And the reason I teach this strategy is because it's not just about living tax-free. It's about living your best life and having the IRS pay for it. So if you're LLC, or S Corp, whatever, you can have a board of advisors. This could be your homies, your family members, whatever. The IRS allows you to have 4 board of advisor meetings per year, anywhere in the country you want. So you can go to Dubai with your family, call it a board of advisors meeting, sit there for 4 to 5 days, to talk business for 1 hour, and then go kick it the rest. And you can write off the cost of the flights, you can write off the lodging, you can write off the meals, all this stuff while you're traveling with your family and traveling with your friends. You now call it your board of advisor meetings. I'm going to Brazil next month to do mine.
So basically what he's saying is that you should make your friends and family into your board of advisors, take them on a vacation 4 times each year that you pay for so you can have board meetings with them. But here's the thing, if it sounds too good to be true, it usually is. The IRS only allows you to deduct travel expenses that are directly related to business meetings where the main purpose of the meeting is your company's business. Additionally, the travel must be reasonable to serve the business purpose and cannot be lavish or extravagant. So taking a business trip to Dubai or Brazil, like this TikToker suggests, will not qualify for a tax deduction unless you're pursuing a business opportunity in one of those places and you can show through detailed meeting agendas and other proof of business activities. Our last video for today is writing off a summer vacation.
Write off your summer vacation. Well, one, you need a business purpose. So are you going to visit clients, have meetings with the company, have employee meetups? It's a remote world. Maybe it's time to meet up the people that you never want to see. So have a business purpose. 2, document the who, what, when, where, why of why you're doing it, where you're going, when, all that fun stuff. Have your ticket stubs, have your receipts, have that all saved down. And then prorate it if you're going to have some personal leisure. So if you got 7-day trip, 5 days of those are business, Monday through Friday, and you got 2 days of that is personal.
So in a nutshell, he's telling you to come up with a business excuse to take a summer vacation and meet up with clients or employees while you're there. Just like we went over with the first two videos, you know that the main purpose of the trip has to be business in order to write off those expenses. So if you book a trip to Seaside, Florida for a week and meet up with a client that lives in the area while you're there, it doesn't necessarily mean you get to write off the trip. You could maybe make the case for one night stay at the hotel and definitely your meal while meeting with the client if it's a working meal. If you happen to have a lot of clients in the area and have regular meetings set up throughout the week, then you have a very strong case to deduct the week's hotel and travel expenses. One other expense rule that each of these videos kind of glosses over is the fact that you can typically only deduct 50% of meal expenses, not 100%, starting in 2023. Did you find this information helpful? If so, you're in luck, because this is the first video in a 3-part series about bad TikTok advice. I'll see you in the next one.